Straightforward. The key is I get a lot of people think that they have to put 20% down to buy a house. You can get into a house for as little as 3 to 5%.
Hi everybody, I'm Haley Rich with Coldwell Banker, and this is Rod. Remind me how to pronounce your last name?
Mashat.
Mashat. Rod Mashat.
I'm only in her office. You think
I've heard your first name a lot. You don't say your last name very often.
No.
So Rod here, he works with Guaranteed Rate Affinity. He's our lending partner here with Coldwell. So Rod, tell me a little bit about yourself, just a basic rundown.
Basic rundown would be I've been in the business a little over 20 years. It's been a blessing for me to be a partner with Coldwell Banker. So we're their national partner, and we call it a joint venture. So we're a resource for the agents, for their clients, whether they're utilizing us or not for the transaction, just to bring value.
Awesome. Would you, could you think off the top of your head like 3 things to maybe start a deal successfully, right? Because a lot of people start somewhere in the middle and then they start backtracking so that they can get to the beginning, and they don't realize they've done that until they're like, oh crap,
yes.
I don't even know what my budget is.
Yes, I think simply put, obviously the opportunity in most cases for us comes from a real estate agent. So Haley's like, hey Rod, I got somebody for you to call. So key thing is exactly what is it that our goal is, because a lot of times, which is a good problem, I'd say, is that somebody can qualify for more house than they even want. And what our goal is to basically, it takes 5 minutes to get a basic starting point, an application. We're looking at the whole picture, what do we have to work with, and matching that up to the house payment. Maybe somebody's renting for $2,000 a month, and rents are crazy right now. So a lot of times we're getting them into a house and they might be paying less than they're paying for rent. Now we're real close, but now they have ownership in the property. Mm-hmm. So step 1 is really get that application, get what we call a pre-approval completed. It's not a lot of work. Usually within a day. I mean, a lot of lenders say 10 minutes. In theory, if we get on it right away and that's all we're working on is that deal, we can get it turned around quick. Our goal is to really, like I said, we're representing the client more than the agent. From where Haley's at is we're trying to match that up so that we're setting a good target. The last thing that we want is somebody to go out and fall in love with a $400,000 house when their budget's at $350 or whatever that example may be. So getting that application, knowing you're good to go. There isn't a real timeline on that approval. Credit reports tend to expire after 120 days. So that's the only thing that we'd have to refresh down the road. Assuming they're kept paying the bills they were, same employment that we were working with, that approval's good. You just know you're good to go. So when you get out there looking, you have the confidence that you can do it. And there are different tactics, which I think maybe a follow-up phone call or talking with the client on how you position that offer. What do we have to work with? Different tactics to set our offer aside. I think from where Haley and I are at, if I can say this, is our goal obviously is to get you under contract. So anything we can do to separate you, or make our offer stand out, that's our goal. We need us to be at the top of the list from a seller's perspective. Absolutely.
So you mentioned earlier you were talking about your free second look. Tell me a little bit about that.
Yes. What we've been doing, and it's really for Coldwell Banker agents and their clients. It's all about a lot of times, when you talk to Haley, you might have a good friend that's in the business. And again, our goal isn't to try to say, hey, you have to use us. Our goal is, with this second look, is basically like it sounds, is let's see what you're being provided, what type of loan package they're sharing, what's the rate, what's the fees. Those are key things. We'll take a look at that just on us, send it over to us. If we feel you're getting a fair deal or a good deal, we're going to let you know that. It's just a comforting thing, and it's a value we want to bring to clients of Haley's. And if we feel we can beat it, don't get me wrong, I'm going to be the first to say, hey, I think I can save you a little bit of money or get you a little bit better interest rate based on what we're looking at. So it's really just to help that client, make sure you walk away comfortable that you're getting a good deal. I guess that's the answer. We're a big company, and we have a lot of resources and tools, and we're not always the cheapest out there. I don't mean to say that, but we're tough to beat. And without sounding wrong, sometimes the family member or the best friend assumes you're just going to utilize them, and it might not be the best deal. So if anything else, you can come back and say, hey, this guy over here has given me this, and maybe you can get them to sharpen the pencil too. So
Right, absolutely. So when most people think lending and loans, they think interest rates. Where are we seeing interest rates right now?
Well, the bottom line, in my opinion, 20 years of doing this, is rates are on the climb. Okay, nothing dramatic. We've been spoiled over the last few years for sure. So spoiled.
2 point what?
It was in the 2.5 to 2.3 quarters, 30-year fixed position, fixed rate, nothing can ever change. They're creeping up. They're probably in the low threes right now. The market has sustained itself right now. What I mean by that is, without getting too technical, inflation and inflationary scares works against interest rates. So there is absolutely a concern with inflation in the market that we're in right now. So that's putting pressure to raise interest rates. When we have something unfortunate, which I don't like to talk about, it could be a war going on somewhere in the world. This COVID is probably the thing touching us close to home now. When there is COVID concerns, that's going to negatively impact the economy, that puts pressure back down to help us in the interest rate environment. So right now we've got inflation and this Omicron, I think they say, if I heard that right.
I don't know if I know how to pronounce that either.
I don't. There's too much. But I don't think COVID's going anywhere right now. Again, I'm not a professional to speak to that. I think it's something we're going to deal with as a part of our culture and our life moving forward. Just keeping it contained is obviously everybody's goal. So when you have pressures of the COVID working against higher inflation, they're kind of leveling out. So recent concerns with this Omicron is why I brought it up, kind of help push the rates and keep them where they're at, which if I were to predict into the future, probably maybe mid next year, we might be in the 3.5 range. Don't hold me to that. And rates, putting it in perspective over my career, are as good as it gets still. And I think that's been the biggest fear. We've been so spoiled. You've got to look at, when you think of a market that's appreciating, real estate appreciation, and where you're putting your money, it's a pretty cheap cost of borrowing.
Oh God, it's almost free money. Not quite. It's as close to free money as you've been able to get for a very long time.
Yeah, it's cheaper than a student loan.
What are the highest interest rates you've seen in your 20 years?
Probably around the 7.5, 8.
Oh, I was expecting worse. Okay, that's.
Well, I'm not that
I mean,
old.
that's bad. But like, I've heard. I think my aunt was mentioning like, oh, we bought ours at almost 18%. And I'm like,
my folks were at 18%. Of course, they paid I think $50,000 or $30,000
oh,
for the
right,
house.
true, yeah, that's
So it's
right.
kind of-
They're not paying $500,000 on
Right.
a house at 18%.
Right,
Can you
right.
imagine? Oh my God.
It would shut down the
There would be
world.
so many foreclosures. There's no way.
No, it couldn't sustain it. And I'm a believer in very traditional financing. So, 30-year fixed positions, very conservative. We do all sorts of products and programs, but if somebody's asking me, I'm thinking conservative. Let's keep ourselves protected and
Absolutely.
yeah.
Don't ever go above what you're comfortable doing.
No.
What
And
you're
then,
sure you can do.
when you have home prices rising and you have rates rising, it does affect, that there is a cost of waiting, I guess is what I'm saying. And again, I have no timeline on anything, but I don't think Colorado real estate's going to slow down. It's been a strong market for a long time, and it's time to get in, get your money working for you, take some of these tax benefits that are still available. So I'm a little biased versus renting. So there's something about after you close on a house, pulling up to the driveway with the keys in your hand and opening that door knowing it's yours. It's a pretty powerful thing.
And knowing that, like, when you make payments, they're still kind of yours because you own the asset essentially. So in a way, you're putting money towards what you'll sell that for, and you're not giving it to somebody else.
There's no difference in writing a mortgage check, in my opinion, than funding a 401k or investing in wherever you may invest your money.
Absolutely.
Because that's your equity. So probably pretty obvious, but 3 or 4 or 5 years, you're probably on that first house. You're not buying a dream house. You're getting yourself in market. You're establishing equity. If maybe you had a limited down payment on the front end, Now you go to sell it 5 years later, maybe you've got $50,000 or $100,000 that you can then utilize to the next one, or that property becomes an investment property, and you move up from the townhome or the condo, and next thing you know, you're buying the single family house. Your family's changed, and you've got some rental income coming in on the side.
As long as you own it.
Hundreds of
Just
those.
own it.
Own it.
And I do understand that housing prices look absurd, but if you think about the rate at which homes are appreciating, you almost instantly get equity by buying a home, because that home's going to be worth more next month than when you bought it this month. Yep. Which is why there's such a you probably should buy something now. I know it seems a little pushy, we tend to do that to you guys, but it's because we see these house prices just bumping up each month, and it's okay, you might want to get into something.
Well, and I think the whole approval process is just that. It's getting you ready. You're open to looking when it pops and you find the right house, you're ready to go. That's really where my role is just getting somebody ready, knowing they have the confidence when that house pops, because you never know when it's going to. You're ready. You're not starting panic on a Saturday.
Right. I want it, but I don't know if I can have it.
Right.
You don't want to be in that position. You want to know what you can get when you can get it. So I guess to finish this off, I mean, do you have any other advice, for those that either have never gotten a loan or have, and it's been a very long time?
I think more than ever, the mortgage business is very straightforward. And what I mean by that is there were times where all sorts of funky different loans and different things available. Now it's pretty straightforward. The key is I get a lot of people think that they have to put 20% down to buy a house. You can get into a house for as little as 3 to 5%. There's the processes. We look at pay stubs, we're looking at income, we're looking at debt. There's a calculation that we do to find out, based on that percentage of income versus debt, what somebody can qualify as a house payment. And it's pretty straightforward. We look at our cash to close, we look at credit. Credit's not a make or break, but there's no secret. The better your credit is, the better the potential financing is. So if we need to take a little bit of time to work on that credit, then that might be step one. And I think just being prepared is my best advice. I mean, ready to go. I obviously am a believer in owning real estate, and I think it's a big part of somebody's long-term financial plan.
Absolutely. Well, Rod, this was wonderful. Thank you so much. And I hope this was helpful for all of you. I know that these interviews will eventually compile to something where you can just go into the backlog and just find out what it is that you don't know yet, because there's so much that people it's like some opinion. There's some hearsay. I heard this, I heard that. So it's good to have straight from the horse's mouth exactly what the lender does, and exactly what to expect, and a little bit of advice. And I really appreciate this. This is great.
I'm grateful. I don't do a whole lot of these, and
I know I abducted him from his regular job.
Yeah, no, we're busy, and we're blessed to be busy, and certainly a phone call away. Reach out to Haley. We'd love to help, and thank you for allowing us to be a part of this.
Wonderful.